So guys, what we're going to talk about here, I created this slide so it'll be easy for me to draw on it because I find this to be substantially more uncluttered than going to an actual chart where you're going to see just all kinds of indicators, lines, arrows, all kinds of other knobs going on. So what we're going to talk about today is the trailing start and the trailing and the percentages. So I think that there's enough people that I talk to throughout the week that are still confused about how this works. And so we thought it would be a good training topic. So the center line there where it says 0% is the beginning of your week. All right. Everything going north in blue is going to be a percentage in gain. Everything going red or south is going to be a percentage in loss for the purposes of what we're showing here. So let's say that in our settings, we decided to use the trail as the means by which we're going to manage our profit. All right. Because you can still do, this as a fixed weekly goal. Now, let me just share with you guys a few different things. As many of you know, I can go down a rabbit hole. I don't mean to, but I'm pretty darned adamant about this. And if you don't know how to have a trading plan, please reach out to someone that you're trade buddies with. And if you don't have a trade buddy, make one and make that trade buddy just a little bit above your level so that they can pour into you and bring you up, right? So here's what I mean by that. Ryan and I have been trade buddies since the very beginning. Actually, before there ever was a Forex company, Ryan tried to show me trading and, it was exhausting in my mind. But I wasn't in a place where learning was all that important to me at that time. And so I always kind of wanted to learn, but I just didn't put the time into it. So I fully comprehend that looking at charts with indicators and all kinds of things going on can look like a giant bowl of Skittles. And everybody's like, well, yeah, but we have this piece of software and all we have to do is set it up and, then it runs and we don't need to know anything. No, not true. All right. The more you educate yourself on how Forex works, how markets respond to certain things, the more that you guys can educate yourselves. And I think Forex is an ongoing education forever because market fluctuations change for all kinds of different reasons. The better off you're going to be. Certainly, there is a huge difference between performing your own technical analysis and placing trades that are manual versus running our software. But guys, I promise you, it's equally as important to learn how these settings work and what happens when you modify something. And one of the things that I live by is a trading plan. So I have all of my rules set up and I stick to them. Oddly enough, I kind of came up with this idea on my own of doing that. But then I find out as I read more that that's actually a good practice to have. So here's what I know. I'm a little bit older and I've had the opportunity to be involved in a lot of different financial vehicles, a lot of different financial tools, like annuities and life insurance policies, whole life, universal lives. I held licenses for life insurance and health insurance for a number of years. I was even halfway through my Series 65 when I decided I didn't want the government in my back pocket that much. And so I stopped. And who would have known how handy that might have been in these days? But now I don't like to read those kind of books. So I'll never do it. And besides, we've got the one and only Steve Vetterell to take care of that for us. So that's a wonderful thing. But here we are I just want to ingrain upon you how big 2% a week is. Okay. Now, I don't want anybody, or I'm just a guy who's passionate about teaching, who's passionate about this software and the Forex industry. See, here's what's so cool. And I love to say this. All right. Forex existed before Avoria Prime and Forex will exist after there is an Avoria Prime, whatever that looks like, 10 years, 20 years down the road. So why not get good at the one thing, the Forex thing? So that if you ever decide that you need to go, or if there ever is anything that goes on, you have a skill that goes with you, which is why I'm so fired up about Adese Duncan, right? So the more that we can learn about Forex, and it's amazing to sit with Ryan when he looks at a chart and he sees things that I don't see. It's rare that I see things that he doesn't see, but we kind of view things from a different perspective. For those of you that used to be on our Full Throttle Forex calls. That's one of the reasons why we did it. And by the way, those will be coming back at some point in time after we get our considerable amounts of energy on the Avora Prime thing in a more of a cruise control, because we're certainly not there. So guys, you should have a trading plan. Now, just because we have this thing called a trailing equity that can provide a safety net is no good reason for you to feel overly safe. And we all know that. All right. So what do I mean by that? All right. If you were a tightrope walker, right? And you were walking over some crazy chasm like the Grand Canyon or something like that, I promise you, even with a net underneath you, it would be scary, right? So I want to draw that analogy, because even with this thing called a trailing equity underneath you, you can get stung. All right. So I don't want anyone to ever have a false sense of security about how that actually works. So we're going to start right there. So let's just say, because I got caught in a wild oscillation, and you guys, here again, so there's a lot of new people on the call. A lot of people don't know that when I first got into Forex, I traded with a demo account for 90 days. All right, because I have no desire to gamble. I have no desire to risk capital that I've worked my butt off for in my life if I don't know what I'm doing. It still blows my mind. Someone who can't even spell the word Forex in the second week they're trading live. I promise you, I don't care who they are and what their IQ is. They're not ready, but they love it and they want to do it. So who are we to say no? But the reality of it is you can't be in a hurry to go live until you are 100%. I mean, I could ask a whole, again, not placing any judgment on people on this call, but I could ask you some questions that if you can't answer, you shouldn't be trading live. It's just that simple. But here we go. So we need to make room for the software to be able to flex, for the software to allow the market, I should say, to be able to oscillate. So you see this thing inside your MT4, they're called oscillators. I mean, like a heartbeat oscillates, right? The market goes up and down. It oscillates all the time. So let's just say that a couple of different things here. Let's say that we wanted to set up a 2% start, right? So we start at 2. Let's just type start. All right. And we want to create a risk-free week. Okay. If we wanted to create a risk-free week, somebody put in there what my trailing equity should be. I'm hoping somebody catches this. It's kind of a trick question. Somebody type in the chat what my trailing equity should be if I want to set it up to be a risk-free week. Come on. 45 people on the call. 2 and Nancy and 1%. Okay. 2 and Nancy again with just the percent sign. You're freaking me out. You're a school teacher. All right. Anybody else? Anybody else? Nobody's answering. You guys pay attention. 0 and 0. Hernan, you're funny. 1%. Okay, I'll play. 2%. All right. So let's say that all right, that's probably the best answer, but it is a trick question. All right. Most people would say 2 and 2%, right? But if we're starting, let me change colors. Yeah, that's what I like about this. See, this is a cool tool. And we start here. All right, let's say we start the market there, right? And we're saying, hey, 2%, and I'm going to set a trail below it at 2%. So that looks like a risk-free week, right? To everybody? Al's saying 1 and 2. Here's what happens. The market starts, it looks good. It starts to go down. It goes back up because this is what the market does, right? It's oscillating. It goes down. It goes back up. And then there's a huge swing before it gets here. Doesn't get there. And it goes like this. Are you in a risk-free week? No, you're not. You are not in a risk-free week with these settings. And I'm illustrating this just to point out to you that do not get overconfident because we actually have a trail. Probably 0 and 0 is probably the best answer. to be honest. The best answer is stay out of the market totally, right? So you can't be in a risk-free week with these settings. Let me go ahead and erase some of this. All right. So you cannot be in a risk-free week unless what happens with these settings. Now these settings are great, but here's what a risk-free week looks like. You know, no matter what the market is doing, right? Let's say that the market, we start in here and the market is, you know, doing some wild and crazy stuff. Okay, it never gets down to your -2 and then it pops in here, right? Now we are in a risk-free week, and only after we hit that 2%. Does everybody, if you get that, put a 7 or something. I get it. Just say something in the chat box if you understand that in order to get to any kind of a risk-free week, you have to get to the start. If it doesn't get to the start and everything goes sideways and the market does one of these, you know, and I'll just say it, you know, the pair whose name shall never be mentioned, the USD CHF type swings like it did in December and drops off the face of the planet, I went down, I don't know, 62%. Yikes. Okay. It was not good. Wouldn't have mattered with a 2 and 2 had that happened in this case if I never gotten to that 2%. So I just wanted to share that with you right out of the get-go, that there is no risk-free weeks until you hit your trailing start. So as long as we do that, let me pick a different color here because I didn't mean to pick something that was the same color. As long as we're able to hit the 2 and our trail was set at 2, we are now definitely in a risk-free week. In fact, as it climbed above, maybe that's at 2.25 right now, you know, because it's a little bit above. If it retraces 2, guess what? You've locked in 0.25, right? Because it's only going to go backwards 2. So it stops right there, 0.25. So you did lock in a little bit of profit. Trailing needs to be activated. That is correct. Now, there have been people trying all kinds of things, which I love. Hopefully this makes sense to everybody. You're right. Trailing needs to be activated, Rebecca. And until it is, there is no safety net. That's the point. All right. So we don't want to get overconfident. So this all boils in, for me anyways, as to why 2% is still a very solid goal every week. I mean, you've heard Steve Vetterl say it on our calls. Hedge fund managers try to get 1% for some period of the year, every week or month, or I can't remember what he says there, but 1% is good, right? 1% is good. And Ryan says it this way, and I love it. Every penny that you don't lose is a penny that you've gained. So that ring of despair, that's right, Myra, the ring of despair. Holy moly. I had little CHFs going off in my brain like small explosions that year or that month. Anyways, so now, if you wanted to give the trail a little bit more room to breathe, then like I've been doing, then you would do a 2% start and a 4% trail. Now, what does that look like? All right, well, let's switch up the colors and give ourselves a nice blue color. And let's say that we ended up going to about right there, right? So it started. Now, where is my trail going to be? Well, it's going to be 4% below, which would be, I don't know, it's a little bit above 2, so it'd be a little bit above 2 there. That stretch there is the 4%. But have I locked any profit in? Nope, I have not. Now, there is a rule of thumb in the Forex market that seems to be in line with risk management, and that is that you should never risk more than 2% of your account on any single trade, right? Now, the thing is, with Alexander, you're in multiple trades, so risking 2% of the account on the whole mess all week long, to me, is even more conservative than what this is. All right, you got one trade going at a time because you're a manual trader or a spot trader. You're risking 2% of your account through some simple math and so on and so forth. But this is a way for you to risk 2% of your account. But again, if you don't hit the trail, the start, that safety net never is invoked. And I hope this makes sense to everybody. Now, here's another technique that has been working beautifully. And that is, if you're going to run something like I was running, like a 2-4, let's say, and everybody knows what I mean. Why not 0 and 2? Uh-oh. Are you kidding me? Sorry, you guys. My computer just went whack. What just happened? Okay, I'm back. Holy smokes. Why not 0 and 2? So you want to start it out right out of the gate, Hernan. I know that you did that this week because I know you're running 0.25. I just don't know that for this piece of software, that's the best idea in the world. So let me tell you what happened to me today. And this happened, right? Okay, so I was at 2 and 4 trading big lots, all right? Now pretend that you didn't see that as your starting lot size, okay? I'm not gonna tell you what size account, but this is one of the reasons why I trade on a demo account for so long, because I'm gonna try and break everything that I can in my trading plan and so on and so forth. Success today, I'll tell you that. Yeah, right. Shush, Simon, I know. I'm like you looking for 0.001 if I can find it usually, but no, I was on a 0.09. So here's what happened. All right. The market moves so quickly, especially if you're not even looking at it. And I wasn't today, I was working, but it was from over here on the side, right? And this is what happened. There was a wild swing today. Everybody was talking about it for a minute. And when I wasn't looking, I literally was only in the market. So I didn't trade this week, but I was trying something new. So today I decided to turn it on for a minute. And I did, and it immediately went like this. It immediately went like this. It actually got up to over 3 while I'm not looking. I was in the market for a half an hour, and then it spiked down, and I lost just over 1%. Boom, boom, just like that. Why? Because my lot sizes were too big, number one. And there was a wild swing in the market. So I had the very good pleasure of being able to talk to the software developer today because I didn't understand what happened. He Zoomed with me and, he told me basically that I was nuts for running that big of a lot size on the account size. And it confirmed that is true. So what can happen if you're running a lot size that's a little bit larger and you get above your percentage goal, right? It's a good idea to go back into your settings. What was my start? You mean, I'm not sure my start was 2%. So I was 2 and 4. All right, which would have put me -2, but I got a little bit above it. So when it came back, it just was here. And I lost 1%. But I mean, it was a blink of an eye, and it happened in a half an hour, right? And I mean, it just happened really quickly, and I didn't see it. So naturally, I had questions about how did it happen, because normally, you would see something like that, but it's just so quick. So what does that tell you? That tells you the market does this, right? A lot of oscillation. And if you're not giving it the room to do that with this, 2-4, 2-6, 2-0, 2-2, whatever you're doing, and your lot sizes are too big and there's a market swing, you're going to go up quick, but you're going to come down just as fast. And when that happens, you're just going to be taken straight up and out of the market. And that's what happened. But see, remember this, if you remember nothing from this call, all right, that's why we trade demo accounts, to find out what not to do. I have a live account queued up, ready to go. It's been sitting there. Yep, I'm itching, but I am not going to do it until I'm fully confident that I've found the way that I want to trade this software, because there are many ways to do it, right? So here's another way. My very first week, I hit 7.69%. And I was flipping out because I mean, I was like, oh my gosh. And here's the thing. I was only in a 3.59% drawdown, biggest drawdown of the week. And I just couldn't believe it. I mean, I couldn't believe it because many of you that have been with us for an awfully long time know that a 3.59% drawdown is nothing compared to what the old piece of software used to get. I mean, it was fairly common to run around 20%, 30%. And I'm thinking 3.59% is nothing. And it truly is not much. So, but here's why I bring this up right here, the 7.69%. All right. The reason is and I did exactly what I've been doing. I've been running 2 and 4. But what, if somebody can tell me again, here's a math question. Yeah, JP's already been schooled in this. That's right. What are you saying? Unless you have very specific reason that you're 100% completely understand. Yeah, agreed. Ryan, that's a great point. You could even speak up on that if you want. I agree. Totally agree. The default settings are working, y'all. What Stephen Vetterl is teaching is working just fine. I lost 1% this week. You know, of course, I really wasn't trading. But even last week when I was trying something else that was sort of silly, I lost, like 0.78%. People that were trading with, the 01 lot size or an 02 on 5,000, they all made 5%. They're just patient, right? And I just, again, I'm in demo mode, so I'm trying to figure out what not to do, and I think I've pretty well got it. But right here, the 7.69%, if I was running 2 and 4, what profit do I have locked in? Somebody put it in the chat. Somebody give me in the chat. If I have 7.69% and I'm running 2 and 4, what have I got locked in? 369. That's right. Jim Williams, you're a winner. 3.69. I've already trained Jim this way too. So that's exactly right. So my lock-in was 3.69. I'm like, that's solid because of why? My trading plan is 2%. So I'm up 1.69, right? So here's what I decided to do. I went into my settings, got rid of that, changed it to a 1.5. But somebody just made an excellent point. It was JP. What I didn't do was change my lot size. So again, what I am seeing is once you get up there, if the market starts to retrace and you have the same exact lot size, whatever that is, okay, unless it's a 0.01, all right, if it's 0.01, you can't go any lower. But if you have a 0.02 lot size and it's gotten you this high, when you tighten up the thing like I did from 4 to 1.5, when you tighten up that setting and move the net closer, right? So I'm down here, but now the net's here. Lower your lot size so that when the market swings, you're not going to swing back as quickly as you got there to begin with. And that was, again, that was a conversation that took place with my trading buddy as we were trying to figure out, the best ways to use the software. And I can only confirm that the default settings that are out there are probably the best ones that there are. Now, as accounts get larger, obviously we're going to have to figure out how to scale that up. And there are some tools out there already, but that is exactly what occurred. So I tightened it up. I ended up with, literally in 20 more minutes, I was out of the market because my lot sizes I didn't reduce. But you know what? I got out at 6.19%. So in my trading plan, I literally could have sat out for 2 more weeks. And that's another thing about what we're talking about here is I didn't trade this week. Now, again, and I've done this many, many times with my live account. If I don't like what I'm seeing, you guys, I just don't trade. Does anybody have any questions about this? Is there anything that I can answer while I have this chalkboard shared? If not, I'm going to unshare it. We'll just take some questions for the remainder of the call. We've been on for about 30 minutes. Anybody? Nobody has a question. We're going to send you all to Les Brown Speakers Academy so that you'll feel confident in speaking on these.
I have a question.
Hernan, you always have a question. I love it. What is it?
Okay, so let's say you get out with -2.
What's that?
And then you
broke
let's say
up a
you
little.
get, oh, hang on a second. Let's say you get out with a -2. Can you hear me?
Yeah, I can hear you.
Okay. And you want to go back in. So you
What did you say? You want to go back in?
Yeah.
Oh, just stab yourself in the temple with a pencil.
Yeah.
Okay. So that's my question is, so how do you know if you were to do that, you have to set your
If you make 2%, why would you want to go back in?
Myra, mutage. Go ahead.
So if you wanted to go back in, how would you know how to set that start and that trailing?
So you've already lost 2 and you want to jump back into a market that just ate your face off?
Yeah, because you're on a demo and you're just playing around.
That's a great question. I'm not sure that I know, because I would never go back in, not even on a demo.
If I closed it out and everything went back to 0, I would know, but it doesn't. It shows.
Well, okay, so if you're asking me, does the software take in your previous losses in part of its calculation? The answer is yes.
Okay. All right.
And if that's the question, I think it is.
Yeah.
But I urge, there's 45 people on this call, and I urge everyone, when your trading week ends, like whether it's a -2 or a +10, especially if it's a +10, do not get back in the market. And I get it, you know, it's a demo account, but the idea is just to stay out. I mean, really, honestly, you've had a bad week. They call that revenge trading. I'm going to try and get back what I just lost is a really bad idea. Ryan and I were talking earlier in the night. I go, oh, some of this stuff is so nuts that I'm seeing, you know, across the people that I'm helping. It's like, and I hate, again, I promise you, I hate using gambling analogies because this isn't gambling. And you know, one of my good friends in Florida is telling me, you know, he's telling me, you know, oh, that's just gambling. I go, nah, dude, it's not gambling, but there are a lot of analogies. So let's say this, you have a great night at the tables. You're over there at, you know, the Flamingo. Okay. You can tell I'm old because I don't even know the new ones, right? So you're over there at the Flamingo and you won 10 grand and you go out and you have a beer and you're like, man, I'm on a hot streak tonight. So instead of going to the Flamingo, you go to some other place, right? You sit down and you give back 12. That's what getting back in the market is. You're right, Jonathan. It's a head game.
I have a better analogy than that.
Okay, one up me. I don't mind.
So you're a race car driver, and you crash your car, and you get back in it and finish the race.
Are you sure that's a better analogy?
Yeah. It's just as crazy.
Or did you crash the car so much it no longer drives?
You crash the car, the body's gone off it. There's no.
You know, the kind of racing that Ryan likes, if you crash a car, it's game over. Formula One racing, right? Usually it's missing a car tire or something. But that's
Hernan knows this like anybody. He's been a mechanic on an open wheel, legit full tilt racing team, so he knows.
There you go.
Yeah. You just, you know, come on back in, we'll get you squared away and you're back out again.
Was it Demolition Derby, Hernan?
No, it wasn't Demolition Derby. It was open wheel.
Uh-huh. Good deal. So trying to practice, learn, program the program more. No, I don't learn the program more. No, I'm not sure I understand, Kathy. You want to ask the question? You want to unmute yourself and ask?
I don't know if my unmute is working. Can you hear me?
Yeah, I can hear you just fine.
Yeah. No. My program, I got hit in the same thing. I had just changed lowered my trailing, both the start and the percentage and the lot size, and got hit. Went down from a 532 to a 297, and it closed it out. but I was just trying to get back in for another 2 days of just trying different settings, learning the program. And that's why I was trying to get back in.
I got you. So one thing that you guys can do, you know, I don't know. Yeah, Joan, I will explain the lot size. You bet. You mean what is a lot size, or the way that I was explaining it with the, you know, with changing the lot size once the market starts to retrace, or you've tightened up your, what is, okay, great. I will. Jordan has the little race car on there. So, I guess what I would do in that case is, you, depending upon your broker, and almost all of them are the same, you can have a number of demo accounts. In fact, on my MT4, I'm logged into about 4 of them. I would just switch accounts and try something new, you know, because now, remember how we used to have to go, well, maybe some of you don't know, but we used to have to go in the back office and register an actual account. You don't do that anymore. So it's pretty easy to flip between accounts and start the new one fresh with fresh numbers. That's just my theory, but you're free to certainly do whatever you like. All right, so lot size. What is a lot size? All right, hang on. Let's go to chalkboard, and let me see if I can add just a blank. Yeah, sweet. All right, so lot size. All right, first of all, let me recommend a website for you right out of the get. All right, babypips.com. Babypips.com. And over and above that, I would say go into our very own Avoria Prime and find where it gets explained by the wonderful teacher, Miss Adeze Duncan. But the smallest lot size is a 0.01, okay? And a 0.01 is worth 1,000 units of currency. Now, why did I not say $1,000? Because not everything is a dollar, right? Units of currency, all right? So, and then, so that's the smallest lot size, unless, of course, you're trading on a website called KOT Forex, in which case they have what they call micro lots, and they are micro accounts, and it goes even lower than that. But I mean, you're just doing it for fun, then you might as well be on a demo, as far as I'm concerned. It's crazy. So that a lot size is akin to how much money that you're putting onto the trade. Okay. So if you're moving 1,000 units of money and your leverage, now we're getting deeper, is 1 to 200, can anybody venture to guess how much money or units of money you're actually moving? You see, because if you were moving really 0.01 down on the 4th decimal place, would you really have the opportunity to make money? That's why there's this thing called leverage, right? The answer is 200,000 units of money. 200 times 1,000, which is 01, equals 200,000 units of moolah. Okay, that is what you're doing. This is why leverages can be very, very dangerous. Now, when you're highly leveraged, you use less of your own capital. You're using more of the broker's capital to run this trade. You're more on the radar screen. I like 1 to 200, 1 to 300 max. 1 to 500, absolutely max. But I used to trade at a website, at a broker, I should say, called AAFX, where I thought it was cool to do 1 to 1,000. Yeah, not so fast. If you get into big drawdowns, it can be pretty hairy. So that's what a lot size is. So let me add another screen. So let's do this. 0.01, 0.02, 0.03, right? That's 1,000. That would be double. 2,000. That would be triple. 3,000. All right. All these, if you're on a live account, say at LQDFX, are multiplied by 300 because that's the leverage. You start to see where you're literally moving a ton of money in the marketplace, a ton. And, you know, it's a $6.6 trillion a day trading market, and we're still not even a blip on the radar screen, right? You're talking about 300K. Were you having a question, someone?
Alan, I was just going to say, to make this maybe a little more tangible, especially because we have so many new people, why don't you put some of the prices that we closed with today or whatever of some currency pairs and help people understand that, for example, a 0.01 lot size means that every point, you know, pipette, if you will, that price moves, you have a penny in the market, like in actual dollars, right?
You mean
But
like,
I think
all
I
right.
think that that's going to help people grasp in a way that becomes more tangible to how they're using the Avoria Prime software that is meaningful in terms of their actual money.
All right. So let's take, well, no, let's not take that pair. Let's take the Euro USD right now is at 108.160, 1.08160. That's what Ryan's talking about. Every time, I believe, if I'm following you correctly, every time that moves, you got a penny in the marketplace. Okay?
If you're on a 0.01 lot, yeah,
If you're on a
perfect.
0.01 lot, you've got 2 cents in the marketplace. If you're on a 0.02, 3 cents. If you're so when you guys that's what that leverage does for you. It allows you to make actual money on a the 1, 2, 3, 4, 5th decimal place over, honestly. So let me make sure I've got that right. 108, 472, 108, 156. Yeah. So is that what you wanted to illustrate? So every time that little last decimal moves, it's a penny.
Exactly. If you're on a 0.01 lot size,
You're
if
on a
you're
0.01 lot.
on a 0.1 lot size, it's a dime. Because
Yeah.
now you guys can understand, why is lot size such a big deal? Why is lot size so important? If you blink, you know, when we're talking the furthest to the right, in this case, the 5th decimal to the right, you blink, that sucker can move, you know, 20 points is only 2 pips. If you're on a big lot size, that's a lot of money coming out of your pocket.
I got a funny story to tell. Ryan knows the story probably. So right when we first were getting going with this whole idea, right? Let me give myself another one just in case I feel like doodling. We were talking and he called me up and he goes, "Man, have you seen what the Great British Pound is doing?" I'm new, right? I'm trading on a live account. I don't know. I've been trading maybe 4 months. I go, "No." And I accidentally placed a live trade at this lot size, 1.0. So can you see the difference? It's a lot. So that's a buck every time that 5th decimal place moves, right? So if you're like we just said, let me pull the price again, 1.08225, right? Every time that bad boy moves, it's $1, and it moves a lot. So I'm sitting there talking to Ryan. I go, "Oh my gosh, I just placed a trade with a 1. Oh, I'm up $22. Oh, I'm down $43. Oh, I'm up $67. Oh, I'm down $110. Literally that fast. When you're trading big lot sizes, man, it moves. You know, someone whose name we shall not mention, Ryan and I were out to lunch one day by our old office in Franklin, and we watched that thing go from 20,000 in drawdown during a sandwich to 48 grand in drawdown. We were both just sick, and it was live money. So you guys understand what the leverage and the lot size is all about. Hopefully that helps everybody. And Ryan.